In the next few minutes, you will learn about an exciting new tax law called the Gulf Opportunity Zone Act of 2005. But it is often called the GO Zone. This law is to assist in the recovery of Gulf Coast regions that were adversely affected by hurricanes. It is of the most important tax legislation ever enacted for real estate and provides you with the ability to claim deductions up to 50%. The opportunity is tremendously advantageous to builders, real estate professionals, and those actively investing in real estate. The GO Zone gives you the chance to save and make money, in addition to being a part of helping the coastal region by spurring local economies. The information contained in this video is very important and is intended to educate those individuals interested in offsetting their taxable income through depreciation. Jim McDonald, a leading authority on the GO Zone. He will answer many frequently asked questions concerning this new law. Jim is an active practicing attorney, CPA, and veteran of the IRS, and has shown many how to take advantage of this new opportunity. Please listen closely, for this may be the best 20 minutes you spend this year. Many have already saved hundreds of thousands of dollars, and with this information, you can be next. Remember, it is always recommended talking with your own tax attorney before investing in any tax depreciation program.
CPA tax attorney Jim McDonald of McDonald & Associates will answer common questions associated with what is commonly called the GO Zone. What is the GO Zone?
The Gulf Zone Opportunity Act is for various parishes in Louisiana and certain counties in Mississippi and certain counties in Alabama, certain counties in Florida that are afforded various reliefs, casualty, net operating loss carryback, and the special bonus depreciation of 50%, which is quite a huge benefit for those wanting to develop new property on or after August 27th of 2005 and on or before the end of 2008 when it comes to real estate, and on or before December 31st, 2007 for personal property.
What areas qualify?
Specifically, there are 4 states involved, and many counties and parishes do qualify. The breadth of the Tax Act was very specific to try to apply relief for many areas. For example, in Louisiana, there are 31 parishes in the core zone. In Mississippi, 49 counties in the core zone. In Alabama, there are 11 counties in the core zone. And in Florida, there are approximately 13 counties in the core zone that qualify for the 50% bonus depreciation that everyone is talking about. There are also many other benefits: casualty losses, availability of carryback of net operating losses, demolition expenses, and those are covered also in what we call covered areas, which is has even more of a breadth of other availabilities for these counties that are affected in parishes.
Does Escambia County qualify?
Regretfully, it does not. It is considered a covered area, that it has certain tax provisions for it, but it does not include the core zone, which allows the 50% bonus depreciation. However, RE/MAX of Orange Beach is launching a campaign to try to get the respective U.S. Congressman and U.S. Senator to change that. Please contact those respective offices for those that are in this specific county. It could help effectuate a change.
What properties qualify?
Properties that qualify are new properties acquired after August 27, 2005. But it can be personal property or real property, which was a huge addition to what was otherwise the 50% bonus depreciation under 168K that was available for other taxpayers through all taxpayers through the end of 2004. This now adds real estate, and real estate that is put into service on or before December 31st, 2008. As to personal property, equipment for example, that has to be put in process on or before December 31st, 2007. But there is another added sweetener, that if you have an existing property and you do renovations, those renovations will be considered under the Joint Committee of Taxation to qualify for the GO Zone Opportunity bonus depreciation.
What does not qualify?
What does not qualify are golf courses, country clubs, of all things massage parlors, suntan facilities, hot tub facilities, liquor stores, and gaming facilities, gaming and casino. However, there is an exception for the hotels. The hotels that are attached to the gaming and casino do qualify for the bonus depreciation. The other exception is any property that is financed with tax-exempt bonds. They do not qualify for the 50% bonus depreciation or accelerated depreciation, as a matter of fact.
Do qualified properties have to be new construction?
Yes, they do, and they have to be in place after August 27, 2005. And it can be, it has to be new, either personal property or real estate, non-residential or residential.
Does the property have to be built during the GO Zone time constraints?
The answer is yes. It must be constructed on or after August 27, 2005, and for real estate, whether non-residential or residential, on or before December 31st, 2008. As far as for personal property, equipment, movable type items, desks, chairs, that has to be on or before December 31st, 2007.
Can my primary residence qualify?
The answer is no, and you would not want it to, because you want to utilize, should you sell your primary residence, you want to utilize that $250,000 exclusion for if you're single, or $500,000 if you're married. But it does not qualify for the bonus depreciation.
What are investment properties?
Investment properties would be any rental activity, whether residential or non-residential. The breadth of that is just immense. And for example, apartments, hotels, motels, any commercial type buildings used as a non-residential, manufacturing. The list is endless. But the distinction is, specific distinction is, you want to show that you are renting it and is in a trade or business so as you can be afforded this wonderful depreciation.
Can a long-term rental qualify?
The answer is a qualified yes. Long-term rentals do not come on, could get entrapped with the passive activity rules. The exceptions, the general exception is one where you're renting less than 7 days or no more than 30 days. But when you have a long-term rental, now you must show that you are definitely in a trade or business so as to not get entrenched with the passive activity rules.
What happens when I sell?
What happens when you sell is there will be recapture. It will be ordinary recapture under 179. However, once again, good tax planning can minimize that. Please consult your respective tax professional so he or she can help allocate the sale price accordingly to minimize that recapture and to maximize 1231 gain or long-term capital gain.